You have existing home sales better. You have sentiment at a record high. You have new home sales better. All of that data coming in stronger. How long can that last if D.C. can't pass another stimulus?
Well, it feels like we're certainly in a really good environment for housing, generally speaking. Interest rates being at really an all-time low, a lack of affordable supply in the marketplace, and a buyer that has proved pretty resilient through the summer. I think all of that is lending itself to an outperformance generally across U.S. housing. We're seeing the same thing in our business. At Invitation Homes, our occupancy's up over 100 basis points year over year. We're seeing homes lease a whole heck of a lot quicker, and it generally feels really, really healthy.
What's the supply outlook that you see?
Well, I think as you talk to most people within markets or at a national level, it feels like supply is generally really constrained. We're seeing somewhere between 2 and 4 months of supply in most markets where we operate. And I would say on average, most people consider a healthy market somewhere around 6 months. That hasn't precluded folks from buying and selling homes through the summer, through the pandemic. I do think a byproduct of this will be that our home buying and selling season may go deeper into the end of 2020 than you would typically see in a normal year.
I guess I just wonder who's doing all the buying, because when we get this good data, like I mentioned, home builder sentiment at a record high, and then you have delinquency rates for sort of the lower rated loans for those that maybe have weaker credit scores or don't have enough money to put down down payments, that's rising. Unemployment is rising. So how do we square these two things?
Well, it's a little bit of a couple of different things. The first is the first-time buyer is active. We're seeing that across FHA. You're right in that there is a bit of forbearance activity that has ticked up. It'll be interesting to see how that plays itself out. I think people are taking advantage of some of the forbearance opportunity that's been extended to them by the government. We'll see how that course corrects itself throughout the year. I think the second-time buyer, the third-time buyer, obviously very active in the marketplace. We've also seen a few sellers that have actually been pushing that off to later in the year. So there's kind of an interesting dynamic right now. It should play itself through, all being supported by historically low interest rates. And in that type of an environment, it's going to create velocity. It's going to create transactional activity. And we're certainly seeing it on our end.
Give me some sort of demographics here in terms of, say, moving out of cities into suburbs, out of rentals, say, in New York City and into the suburbs of Jersey. Like, that's a microcosm of what I'm talking about. But what are you noticing on that end?
Well, it's interesting. Our business is a great catalyst for capturing some of this data. We've seen through our summer surveys of new move-ins, almost 30% of our applicants are choosing a leasing lifestyle somewhere outside of a more urban area as part of their decision-making process. We're also seeing that in that 30%, 46% of those are looking for homes that have more space, meaning we're going from something that maybe is a little bit tighter, a little higher, density type of footprint into something that maybe is more detached, a yard, a little bit more space, perhaps a home office. I think that is going to be part of a new norm for the next year or two, and then we'll have to see if these trends stick out for a couple of years beyond that.
Are you noticing any landlords, like people going in to buy up these single-family homes to then rent them out? How much of that is playing into this?
Well, across those nearly 6 million transactions that you mentioned earlier, Alex, a small portion of that is always going to be investors that are looking for opportunities to create affordable housing. We're seeing that activity really stay in line with where it's been the last 6-7 years since the last housing pandemic. I think what's interesting, if you look at housing as a whole, as a percentage of GDP, it's at nearly 22%. That's high. That's its highest percentage since 2005. It speaks to all different categories and types. So there's just generally a lot of activity happening because it's a favorable environment for folks right now.
Do you think that we're on a verge of any kind of eviction crisis from how you look at it?
I don't think so. I think you have pretty responsible actions taking place at the federal level right now from the forbearance perspective with the FHA stuff. You also have landlords. We've helped over 1,000 families in our portfolio today with some sort of modification or forbearance based on their current situation where there's a COVID-related pandemic. We're seeing our peers do that as well in the industry. I think over time, as vaccines come out, as things start to begin to normalize, you'll also see that many landlords are actually working with families that have been impacted. And in large part, if you look at the unemployment statistics, there's definitely a majority of those that are in the younger generation, which is perhaps, not necessarily in parts and segments of housing where you're going to see as much suffering or pain in that sector. And I think as long as we all do our part and make sure we step in and help people through this period of time, I think we can weather it.
All right, let's talk about your business as we round out here. So it's a twofold question. I mean, one, is this the time for you to do M&A since you are in the sweet spot for these trends? Or two, do you have companies coming to you and want to do more JVs to find a way to get exposure to, say, that migration out of cities and that strong demand for single-family homes?
Well, today we are the largest operator of single-family homes with nearly 80,000 across our 16 markets. We certainly are going to maintain an approach to try to grow and create other housing opportunities for families. It feels like it's going to be a relatively competitive environment today in that space, just given the lack of supply, but we're always looking for opportunities to grow. We recently had an equity offering a couple of months ago that was, widely subscribed to, and feels like there's plenty of demand for this type of exposure in real estate. So we're certainly going to keep our eyes open and look for ways to continue to grow our portfolio and also provide better services for our residents so that they can enjoy that leasing lifestyle to its fullest.
Are any companies coming to you and saying, hey, we want to partner up?
It's interesting. We get a lot of inbounds. We get folks that do want to find ways to direct invest or see if we'd be willing to look at portfolios. We typically are pretty picky about the types of homes and markets that we want to be in. We're really location specific. We want to make sure that we're buying product in parts of the market that will lend itself to a greater outperformance on a risk-adjusted basis. And that would include making sure that we're buying real estate that's in and around transportation corridors, major school systems, and making things easy for families. That's our focus. If that opportunity presents itself, we'd certainly want to look at it.